Hello everyone, welcome back to the channel where we bring clarity to complex markets. Today we're analyzing Rama Steel, a company that's gaining attention in the steel sector. Is Rama Steel a good buy, or should you stay cautious? Let's dig deep into its fundamentals, technical analysis, and market trends. Remember, this is purely for educational purposes, so always consult your financial advisor before making investment decisions. They're located in India, a country with a rich history in steel production. India has been a significant player in the global steel market for decades, and Rama Steel has been part of this legacy for a long time. Their roots go deep, and their experience in the industry is extensive. Lately, more people have been looking at Rama Steel. Analysts and investors are starting to take notice of their performance. The company has been making headlines in financial newspapers, and business meetings are abuzz with discussions about their potential. That's because the company's been doing well, and some think it could be a smart investment. Their stock prices have been on the rise, and investors are optimistic about their future. The positive sentiment is driven by their consistent performance and strategic initiatives. Rama Steel makes different types of steel. From construction-grade steel to specialized alloys, their product range is diverse. This versatility allows them to cater to various industries, including construction, automotive, and manufacturing. This steel is used to build things like buildings, roads, and other infrastructure projects. Their products are integral to the development of modern cities and transportation networks. The quality and reliability of their steel make them a preferred choice for many large-scale projects. People need more and more steel in India and around the world. The demand for steel is growing due to urbanization and industrialization. As countries develop, the need for robust infrastructure increases, driving the demand for high-quality steel. This means Rama Steel could sell even more steel in the future. Their strategic location and efficient logistics network enable them to meet the rising demand both domestically and internationally. They are well positioned to capitalize on the growing market opportunities. But before you invest in any company, it's important to do your homework. Investing in stocks requires careful analysis and understanding of the company's fundamentals. You need to look at their financial health, market position, and growth prospects. You need to understand how the company makes money, what could go wrong, and what its future looks like. Analyzing revenue streams, potential risks, and industry trends will give you a clearer picture of the company's potential. It's crucial to consider both the opportunities and challenges they might face. This will help you decide if Rama Steel is a good fit for you. Making an informed decision is key to successful investing. By thoroughly researching and understanding the company, you can determine if Rama Steel aligns with your investment goals and risk tolerance. To know if a company is a good investment, we look at its money stuff. This involves diving deep into their financial statements, understanding their revenue streams, and analyzing their expenses. It's like being a detective, but instead of solving crimes, we're uncovering the financial health of a business. Rama Steel's numbers tell a story of growth. Over the past few years, they've expanded their operations, increased their production capacity, and entered new markets. This growth is reflected in their financial statements, which show a steady increase in revenue. Their revenue, the money they get from selling steel, has been going up. This is a positive sign because it indicates that there is a strong demand for their products. When a company consistently increases its revenue, it shows that it is successfully capturing market share and meeting customer needs. That's a good thing because it shows people want their steel. High demand for their products means that Rama Steel is producing something that is valuable to its customers. This demand is crucial for the company's long-term success and sustainability. It's also important to look at how much profit they make for every rupee of steel they sell. This is where profit margins come into play. Profit margins help us understand how efficiently a company is operating and how well it is controlling its costs. This is called profit margin. A higher profit margin means that the company is able to retain more money from each rupee of sales, which can be used for reinvestment, paying off debt, or rewarding shareholders. While their profit margins have gone up and down, they've mostly been good. This fluctuation is normal in any business, as it can be influenced by various factors such as raw material costs, market competition, and economic conditions. This means they're good at managing their money. Effective financial management is key to maintaining healthy profit margins and ensuring the company's long-term viability. Rama Steel's ability to navigate through financial ups and downs demonstrates their resilience and strategic planning. Finally, we need to look at how much money Rama Steel owes. Debt is a common part of business operations, but it's important to ensure that it is kept at manageable levels. Excessive debt can be risky, especially if the company faces unexpected challenges. Like many companies, Rama Steel borrows money to run its business and grow. Borrowing can be a strategic move to finance expansion, invest in new technology, or enter new markets. However, it needs to be balanced with the company's ability to repay. While they've borrowed more money recently, it's not too much compared to how much money they make. This is measured by the debt-to-income ratio, which helps us understand the company's debt levels relative to its earnings. This means they can easily pay back their loans. A healthy debt-to-income ratio indicates that the company is not over-leveraged and has the financial stability to meet its obligations. This financial prudence is a positive indicator for investors and stakeholders. We can use charts to try and guess where a stock price might go. By analyzing various technical indicators, we can make more informed predictions about the future movements of a stock. These indicators help us understand the underlying trends and potential turning points in the market. One tool is the moving average, which makes the price line smoother and easier to see a trend. Moving averages are calculated by averaging a stock's price over a specific number of periods. This helps to filter out the noise from random price fluctuations and provides a clearer picture of the stock's direction. There are different types of moving averages, such as the simple moving average, SMA, and the exponential moving average, EMA, each with its own method of calculation and unique insights. Rama Steel's moving average has been going up, which might mean the price will go up more. When we see a rising moving average, it often indicates that the stock is in an uptrend. Investors might interpret this as a sign of strength and potential for further gains. However, it's important to consider other factors and indicators before making any investment decisions. The RSI, or Relative Strength Index, tells us how strong price moves are. It measures the speed and change of price movements and is typically used to identify overbought or oversold conditions in a stock. The RSI ranges from 0 to 100 and is calculated based on the average gains and losses over a specified period. If the RSI is above 70, it might mean the stock is too expensive. This is often referred to as an overbought condition, suggesting that the stock may be due for a correction or pullback. Investors might consider this a signal to sell or avoid buying at this level. If it's below 30, it might be a good deal. This is known as an oversold condition, indicating that the stock may be undervalued and could be a potential buying opportunity. However, it's crucial to analyze other factors and not rely solely on the RSI for making investment decisions. Rama Steel's RSI is right in the middle, so it doesn't tell us much right now. When the RSI is in the middle range, typically between 30 and 70, it suggests that the stock is neither overbought nor oversold. In such cases, investors might look at other indicators or wait for a clearer signal before taking action. Finally, the 5 and 20 EMA weekly crossover is another helpful signal. The 5 and 20 EMA, or exponential moving average, gives more weight to recent prices, making it more responsive to new information. And 5 and 20 EMA crossover occurs when a shorter-term EMA crosses above or below a longer-term EMA, providing potential buy or sell signals. When the short-term 5 EMA crosses above the long-term 20 EMA, it might be a good time to buy. This is known as a bullish crossover, and is often seen as a positive signal that the stock's price may continue to rise. Investors might use this as a confirmation of an uptrend and consider entering a position. Rama Steel just had a 5 and 20 EMA weekly crossover, which might mean the price is about to go up. This recent crossover could indicate a shift in momentum and a potential buying opportunity. However, as with all technical indicators, it's important to use them in conjunction with other analysis, and not rely solely on one signal. Steel is important for the world economy. When countries are doing well, they need more steel to build things. This is good for Rama Steel. Lots of countries are building new roads, trains, and airports. This means they need lots of steel, which is good for companies like Rama Steel. After a slow period, many economies are growing again. This growth will likely mean more people will buy steel. Rama Steel looks good, but it's important to think about what could go wrong. One problem could be the price of materials like iron ore and coal. These prices can change a lot, and that can affect how much money Rama Steel makes. Steel is connected to how well the economy is doing. When the economy is bad, people don't need as much steel. This could hurt Rama Steel's sales. Also, Rama Steel has competitors, other companies that make steel. Competition can make prices go down, which can make it harder for Rama Steel to make money. Rama Steel looks like it could be a good investment. They're making more money and have good profit margins. The charts suggest the stock price might go up. The steel industry looks good right now because of all the building happening around the world. But you need to think about the risks. The price of materials, the economy, and competition could all cause problems for Rama Steel. Whether or not you should invest depends on how much risk you're willing to take and what you want from your investments. Do your research, understand the company, the steel industry, and the risks before you invest any money. This is the end of our story, but also the beginning of a new chapter. Thank you for joining us, and until next time, keep striving for excellence.